and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin. It's been an exciting 24 hours. We're going to review what's been going on with the price action, where we think things are heading next, jumping into the world of on-chain data, and of course, the latest news. As I get into today's video, if you do find it useful and informative, smash that like button. Really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's waste no more time though. Let's jump right down into the desktop and start reviewing what's been going on here with the price action of BTC. Starting things off with the 1 hour time frame. So here we have Bitcoin paired up with USDT using the BitGet spot exchange on the 1 hour time frame. And yeah, we got this fantastic news yesterday, which we'll talk about in a little while, about ETS, Grayscale winning their legal battle. And as such, we saw this FOMO pump to the upside. Now, it hasn't been an amazing move to the upside considering the news. You would think it would actually have traveled a little bit further. But for the most part, this is a great move nonetheless. Let's go ahead and just quickly measure it. We saw this move up for Bitcoin here of about 8.53%. Okay, now it has changed our structure a little. So we were tracking the idea of coming down towards 23 to 24,000 under a fifth wave movement. This move to the upside, I think it hasn't broken, hasn't created an invalidation because that happens at 29,109. However, I think it's enough of a move that we probably have now deviated away from the structure that was here, and we are now doing a slightly different pattern. So let's go ahead and just quickly correct what I think is likely to occur now. What I'm going to do is I'm just going to tidy out some of the noise here so that we can just focus in on those recent moves. That'll do. That's nice. Okay, so what do we see? Well, we can see that we had this move to the upside. We came down for a correction and then we rallied on up. And what we want to do is we want to check to see where this goes, right? How high has this gone? Has it gone high enough to create a impulsive structure upwards, or is it standard within its range? And it is standard within where you would expect a C wave pattern to be. As you can kind of see, it lands right inside here. And this little structure would basically put us between 27,763 and 28,366. This is basically a three wave pattern that would look like this. We come up to our resistance down here, and then we rally on up, and we completed a three wave pattern. Now, this comes on the back of probably completing this one, which was deeper than you would expect it to. And so we still have the idea. Let me go ahead and show you from our Fibonacci retracement levels at this high level to this lower level here. You can see that we did hit that 1.618. So it's still possible that we are in a five wave count, which is 1, 2, 3, up here is 4, and we've got to come down into 5. It's possible. Okay, but I think we've got enough deviation to kind of prevent that. But what I'm going to do is I'm going to take our little white line here and I'm going to snap it to the low end of this one at 28,588. That's the area that we're going to be looking for to the upside to break our structure coming down here. If we cannot do this and we just get a complete reversal, it's going to be really unfortunate, but it would stay within its structure. Okay, so we haven't broken that structure even though we've had this really nice run upwards. It's actually just looking like a five wave pattern still, and there's only really one way to break that, and that's to go up higher than 28,588. So it's going to be an interesting one. We have obviously got the fair value gap that was created with this pump to the upside. This is basically tracking the imbalance in the order books. Essentially, so much demand came in such a short space of time, not enough selling pressure was inside this little gap here. So this is basically 26,102 to 27,269, and they do have a tendency to getting filled out, these gaps. So we'll keep a close on and see how price reacts over a longer term. But for now, we are above the 50 EMA, 200 EMA on the hourly. We are still in we've got a change of character to bullish, and we've got a break of structure confirming that our structure is bullish here, and so we'll keep an eye on that and see whether we can keep it. And we are looking now for a move upwards. We want to break the 28,588. However, I suspect we probably have to cool off a little bit now before we do get that next run upwards. So we'll keep a close eye on it, but it's looking very, very positive at the moment. Let's take this up into the daily. So the daily, again, it's still tracking the idea that we have this five wave move. As you can kind of see, our daily chart hasn't changed. It hasn't deviated away too much. It does obviously change our slightly low end target now. Let's go ahead and see where this can be based on the existing high. If it were to reverse right now, then we are going to be targeting out right in here, basically between 22,693 and 23,874. Again, we're getting close to that invalidation line, 28,588 to break that structure. The higher that wave 4 goes, the lower that wave 5 goes. So this is still technically in play. We don't want to see it. We want to see it get broken so that we can just kind of look at this as a double bottom kind of situation here. The other part of this, which could be a little bit concerning, I think we've probably already kind of got out of the danger zone on it, but we'll check it nonetheless. I was going to say an inverted cup and handle would be something to consider. Yeah, we've gone past the typical 50% area, so I don't think a cup and handle inverted is going to be too much of a problem. But if it were to be an inverted cup and handle, essentially it's kind of be completing out this fifth wave movement, as that cup and handle would basically look like a cup coming down here, a handle coming up, and then breaking that to take us down there. Unlikely, I think, because we've already retraced more than 50% of this move to the downside, and that would be very uncommon for a cup and handle. So not too concerned about that. We are looking to try to get this price action above the 28,588 in order to break our structure and continue our move to the upside and break the idea of the bearish trend that we currently found ourselves in after the last little hurdle that was going on just a couple weeks ago. So all looking okay on the daily time frame at this point in time. Again, we've got the fair value gap as documented earlier. We are just looking to see if we can get above that 28,588. Let's go take a look at the weekly. The weekly here is above now the 50 weekly EMA. The question will be, can it close up there? So we've got to keep that price nice and buoyant if we want to get this into a stronger position for next week. We have obviously got some distance now on that 200 EMAs, currently sat at 24,691. Ultimately, I'm not too concerned about anything here on the weekly. I think the weekly has actually held up quite well. The concerns are more around the lower time frames, such as like the daily, the 8-hour, the 4-hour. Those are the ones that I'm more concerned with. The weekly is actually looking okay. I'm not too concerned with it. We can of course look for another tap to the upside here, but it is still not looking overly strong at the moment in terms of like demand and things like that, but it is stronger than the other time frames. So looking okay for me on the weekly, and good to see that we're above that 50 EMA at the moment. Let's go ahead and bring this up into the latest on-chain data and news. So membership.𝗕𝗘𝗪crypto.io is our membership website. Basically here we hold a lot of additional benefits for our members, everything from member-only content, project reviews, project reviews, airdrops. We've got member-only videos, we've got course material, on-chain data, so much, right? Each of the plans have a 7-day free trial. There's like loads of different plans and things you can choose from, so why not have a look and browse at your leisure. 7-day free trial. If you don't want to continue, just go to your profile there, go to your subscriptions and cancel. If you do not cancel, you will be charged, but why not check it out? I think you'll be pleasantly surprised by what you find here at Cheeky Crypto. We're just going to go over to the data zone though. We're going to take a look at the Bitcoin on-chain data and load that up. When we load that up, this is what we get. We get the overview. We can see if everything that's kind of going on at top level stats for BTC. As we can kind of see, we have $69,000 as the all-time highest 657 days ago. We're 59.97% down from the all-time high. We had 737 Bitcoin being minted yesterday in the last 24 hours, an inflation rate of 1.38% over the last year. We can see that there were 873,000 active addresses in the last 24 hours, 326,000 transactions, and yeah, all that kind of wonderful stuff. Lots of different things here. We're just going to take a look at the wallet counts, which is the amount of Bitcoin that sits in, sorry, it's not the amount of Bitcoin, it's the amount of wallets that have specific amounts of Bitcoin. I can get my words the correct way around. So when we take a look at this, like we've got the whales at 1,000 BTC or more. There's 2,021 wallets that have over 1,000 Bitcoin. This is up 0.55% in the last 24 hours. Sorry, last 7 days. In the last 30 days, it's up 0.3, but over the last 365 days, it's actually down 6.17%. So we can see that there's a little bit of an uptick here, but the ultimate trend on the whales are essentially is that they've been selling. They've been selling all of this time here. They've been kind of stagnant at the moment. They haven't really been buying up just yet. 10,000 BTC or more has actually been buying up. You can see here that there's a bit of a move to the upside over the last 7 days, up almost 1%. In the last 30 days, up almost 2%. In the last 365 days, it's up 14.74%. This isn't uncommon because they did buy up in the 2018 bear market before they abruptly flooded the market with excess Bitcoin, bringing in the actual bear market low. We can see here that they've been accumulating during the bear market of 2022, and they started to see a bit of a downturn here in terms of the number of wallets as the price was moving on up. So they've seen a little bit of an uptick here, but it's not overly impressive compared to everything else that was going on previously. So we'll keep a close eye on it, see what's going on. Obviously, retail investors continue to FOMO in. Over 1 million wallets now that have over 1 million BTC, over 1 million wallets that have on BTC. It would be nice to see 1 million wallets with 1 million Bitcoin, but there's not enough Bitcoin for that. So yeah, I need to wake up this morning, don't I? We can see that over the last year, they're up 13%, right? It's basically up all the time because they've been buying up every dip and every pump, essentially just FOMOing in. This isn't a sustainable model. At some point, I do suspect there's going to be selling pressure from this retail layer across the board. And what's going to cause that catalyst, I think, is just going to be necessity. It's going to be to keep your Bitcoin or keep your house. I think it might be a really extreme example, but I think it's going to be something to those effect. I think we haven't really seen the full impact of those inflation and the interest rate hikes on a retail level investors just yet. And ultimately, way too much liquidity has gone into Bitcoin at the retail layer. And that's not what the Fed want. That's not what these governments want. It's not why these interest rate hikes are happening, right? They basically want to suck liquidity out of the market. They don't want retail investors, throwing money into the market. They need to get things under control. So until that happens, I'm not going to be confident in thinking that retail are going to hold for the long haul. And therefore, what might make them get shaken out. I don't know what the ultimate catalyst is. We've got a Fed pivot. Historically, stocks drop 50% on a Fed pivot, and that's obviously going to have an impact on BTC. But is all these ETFs going to be the thing that just breaks this? And actually, we see retail investors win this battle against institutional level investors. I suspect not, but it's hard to kind of argue with the logic of what's going on right now, which brings us over to breaking news. Grayscale's wins its SEC battle over the Bitcoin ETF proposal, and obviously a price jumps to a 2-week high in just an hour. So lots of FOMO around this one. So it's really good to see that the court have basically just overturned the SEC's judgment. And again, there were some interesting things within here that I thought were kind of interesting. The way that it was worded. Oh, that was it. The SEC had failed to adequately explain why it treated Grayscale's proposal differently from similar financial products. And I found that really interesting because that's basically essentially saying that the SEC are discriminating against crypto firms. And well, I'm sure that we could have a countersuit going on if this is the case, because they can't just treat Grayscale differently because they are doing crypto related products versus that of standard institutional level investment elsewhere. And therefore maybe there's a countersuit to be done against the SEC, because I'd like to see Gary Gensler's face some jail time at some point in the future. He should really. I mean, he won't, but he should. I'm not going to go down that rabbit hole again. Now, in terms of ETFs and the SEC deadlines, there's 7 coming up. As we can take a look here, we've got, ARK Invest obviously has been kind of delayed a little bit. We actually have a list here. Let's go into this. So we've got Bitwise will learn about its ETF proposal on September 1st, while BlackRock, Van Eyck, Fidelity, Invesco, and WisdomTree are all awaiting their decisions by September 2nd. Now, what do you think is going to happen? Let me know in the comments below. Do you think the SEC are just going to go and deny them all, and then they're all going to have to go to court, and they're all going to have to get them all overturned? I suspect that probably is a route that's going to happen here. I don't think the SEC are going to approve them. I think they're just going to basically deny them, or maybe deny most of them, and then basically have them appeal it through the appeals court, which can take more time and all that kind of stuff. I don't think they're going to be overly friendly to the crypto space, as they haven't shown any kind of willingness to be friendly towards crypto. I know I'm going to just play devil's advocate and say that they're just going to play the long game here and basically just deny them all, and then they're all going to have to appeal them. And it wouldn't surprise me if that's the kind of childish games that 𝗕𝗓𝗪𝗀 will be playing here. But let me know what your thoughts are in the comments below. It's interesting stuff nonetheless. Now, with the recent price action and the recent moves to the upside, let's go ahead and check out some exchange-based data. We see $75 million of liquidations, or $75.5 million of liquidations in the last 24 hours. On that significant surge to the upside, we know what was happening there. So OKX was the exchange that had the most liquidations at 19.82 million. 32.85% were long positions and 67.15% were short positions that were liquidated across the whole. So what's really going on here? Well, we had that move to the upside on this breaking news of Grayscale's ETF win. This essentially has meant that a lot of short positions, 67% of short positions, were liquidated off the exchanges. Now, what's really alarming to me is that 32.85% of that $75 million were long positions that got liquidated. And if we have to think about this from a logical point of view, right, the only way that this would have occurred would have been that people were going long at the top of that green candle, right? And this is pure FOMO. This is pure greed and pure gambling mentality. And so it's very unfortunate that we do see it, but we have seen 32% of long positions getting liquidated whilst the price moved up nearly 10%, right? So very, very interesting to kind of see that retail investors are literally just chasing, rather than looking at things logically. You wait for it to cool off and find a structure, then trade the structure. You don't tend to find that so much. You find that there's just liquidations happening here because people are just gambling. They're just throwing money and chasing the green candles, and that doesn't seem to end well. So when it comes to exchanges, we've got 26% of all liquidations sitting with OKX. Binance is 18%, 𝗕𝗓𝗪𝗀 is 17%, which is a little on the high side in my opinion. Bybit at 13%, Deribit at 11% is very unusual. But again, we have also an unusual circumstances behind the move to the upside. So although there are some unusual things that we wouldn't normally see here, the liquidations are also unusual in the way that they occurred. So I'm not going to read too much into this. They're not sustainable, unless, of course, they become sustainable and we see Deribit and we see 𝗕𝗓𝗪𝗀 consistently highlight the way that they are right now. I wouldn't be terribly too concerned at this point in time, but it is interesting. Now, when it comes to exchanges, guys, you know that BitGet is my go-to when it comes to exchanges at the moment. I do 100% of my leverage trades on BitGet. I do 90 to 95% of my spot trades on BitGet as well. So if you haven't yet signed up, there's an affiliate link in the description down below. If you do use that link, you are eligible for up to $8,000 of rewards, depending on how much deposit and trade on the platform. Ultimately, I think it can become your go-to platform in the same way that it has become mine. There's many different benefits and competitions that they do over at BitGet, so why not check it out? Now, don't get me wrong, BitGet's fantastic, and at the moment it is my go-to platform, but it is not the only platform that I use. I think it's a great strategy to have access to as many cryptocurrency exchanges as we possibly can, and I am registered on many, such as Binance, Coinbase, KuCoin, Gate.io, Bybit, 𝗕𝗓𝗪𝗀, Crypto.com, and so forth, right? This allows me to have flexibility when it comes to using exchanges and gives me the most amount of options in that next bullish market on which exchanges I can use when I look to liquidate my assets. So why not do yourself a favor, sign up to BitGet and sign up to as many of these exchanges. Links are all in the description below and in the Discord server. Let's go ahead and move on into the last part of today's video, which is talking about trades. Now, I would not be looking to trade this one just yet. I would be waiting for the structure to kind of come on in here. I would say that we have to probably cool off a little bit, which means a bounce up and then a move down. So if we just look at a basic three-wave pattern, we might find ourselves coming down towards the equilibrium. I'd be looking for potentially shorting the market if I really wanted to, but I think shorting the market might be a little bit on the dangerous side right now. So it will depends on what happens over probably the next kind of 24 hours. If we're down here and we're nice and oversold on some of these time time frames, we might be able to go long from here back up into those high areas and give ourselves a bit of a good stop loss. We could, of course, if we wanted to, look to potentially short down towards equilibrium, but we'd look for a better entry, put the stop loss above the recent swing high, and get a good risk reward ratio here. So I think there's a few options when it comes to trading Bitcoin on the smaller time frames, but I probably would want to give it a little bit more time to kind of weed out exactly what is going on. We don't want to give ourselves unnecessary pain just because we think we can get a quick short in somewhere. We could actually just give ourselves a little bit of time here to see what structures emerge and give ourselves a higher probability of success in the future. But I think that's going to wrap up today's video. If you have found this useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. Until the next one though, guys, have a fantastic day.